5 steps to generate more profit from your investments. The one reason we end up losing our investment money is that we don't pay attention to the basic rules before investing. Most people want to invest money and they are not from financial background, so they solely depend on their friend or loved one's advice before they jump into it, who still might not be from financial background. It's always better to get in touch with a financial advisor so you are well equipped before you put your hard-earned money to work for you. Let's dive into the basics. First of all, define your goals. Is it long-term investment, short-term, or just for emergency savings? All of these have different time horizon and will impact what type of investments you should choose. Number 2 is diversification. Putting all of your eggs into one basket can lead to hatch them all. Always choose a mix of asset classes and geographical regions to spread your investment so you don't risk losing it all. Third one is regular contributions. Investing is not for a day, month, or a year. Putting a lump sum into an investment account cannot guarantee that you get the best out of it just because you have already invested so much money. On the other hand, regularly contributing your monthly amount will help you buy stocks at different price ranges, which can lead to more profit over time. Fourth one is to use compound interest. Taking advantage of compound interest is the best way to generate more profit. If you want to be paid compound interest on your investment money, you should invest for long term, which means at least 5 to 10 years or 20 to 30 years, the more the better. Now the last and best of all, avoid paying taxes. Can you imagine savings all that money on side for investing and ending up paying most of the profit in taxes? Learning tax implication for your investments can help you make more money. The first thing you should do with your investment money is put it in a tax-free savings account. It can be for a short or long term. If you have decided that you want to take advantage of compound interest as well, then contributions should also be done to other tax-advantaged long-term investment accounts. For more information on different types of investment accounts, investment funds, and personal financial education, hit like, subscribe and bell icon to get notification for our next videos.